Tesla and SpaceX CEO Elon Musk is in a tough spot due to the value of his electric vehicle company fluctuating over the past month. Tesla has also opted for a stock split, which has led to a sharp increase in attracting new investors. In this video, we have all the details about why Elon Musk offloaded millions in Tesla shares and the Tesla stock split. Stay tuned. At the start of August, Elon Musk offloaded $6.9 billion of stock in Tesla Inc., the billionaire's biggest sale on record, saying he wanted to avoid a last-minute sell-off of the electric car maker's shares in the event he is forced to go ahead with his aborted deal to buy Twitter Inc. For those who do not know, the Tesla CEO wanted to buy Twitter but canceled the deal at the last moment, prompting Twitter to file a case against him. Tesla's chief executive officer sold about 7.92 million shares on August 5, according to a series of regulatory filings that landed after U.S. markets closed that day. As speculation mounted over the reason for the disposal, Musk responded in a series of late-night tweets, saying he wanted to avert an emergency sale of stock if he is compelled to complete the $44 billion takeover of Twitter, which he walked away from last month. When asked by followers if he was done selling Tesla shares and would buy the stock again if the deal doesn't close, Musk simply responded, yes. The sale comes just 4 months after Musk, the world's richest person, said he had no further plans to sell shares in the car maker he's built into a global force after disposing of $8.5 billion of stock in the wake of his initial offer to buy Twitter. Since then, Tesla's shares have rebounded from lows reached in May, benefiting from broader gains in U.S. equities. Charu Chanana, strategist at Saxo Capital Markets PTE in Singapore, said, "He certainly is clarifying that he is cashing up for Twitter. The timing of the sale, just ahead of the US CPI release, does say something though. The bear market rally has started to falter, and further repricing of Fed expectations could mean more pain for equities ahead, especially in tech." Tesla shares have risen about 35% from this year's lows, though are still down about 20% this year. Tesla announced a 3-for-1 stock split on August 25th, following the recent highs in Tesla share price. Tesla's stock price closed at $891.29 on Wednesday, August 24. The next day, it opened at around $302. The reason for the drop in the price of Tesla shares by nearly 66% was due to the EV maker completing a 3-for-1 stock split after the closing bell on Wednesday, August 25th. What this means is that one share now costs a third of what it did a day ago. Tesla approved the split in June, its second such split in the past 2 years. But before you start celebrating about how one Tesla share is now cheaper, keep in mind that nothing changes with Tesla's valuation. The company is still worth more than $930 billion after the split. Shares continue to trade at a lofty multiple of more than 70 times 2022 earnings forecasts, a huge premium to the valuations of traditional auto companies like Ford, General Motors, Volkswagen, and Toyota. As an owner of Tesla stock, suppose you owned one Tesla share worth $900. You will now have 3 shares worth $300 each. A stock split is often a sign that a company is thriving and that its stock price has increased. While that's a good thing, it also means the stock has become less affordable for investors. As a result, companies may do a stock split to make the stock more affordable and enticing to individual investors. What happens when a stock you own splits? As a shareholder, you may worry that a stock split will affect your investment, but ultimately, there's little impact on you as an investor. And like we mentioned, stock splits are done to attract more individual investors to invest in a company. According to Robert Johnson, a professor of finance at the Hyder College of Business at Creighton University, it is important to remember that the owner is in exactly the same position as before. Their owner percentage is identical. They will own more shares, but each share will represent a correspondingly smaller percentage of ownership in the company. If anything, investors may actually notice a boost after a stock split. As the stock becomes more affordable and more people can trade it, the stock's price can go up. Does the average investor benefit from a stock split? Typically, stock splits are neither good nor bad, especially in the long run. When a stock splits, investors usually see an uptick in interest in that stock, but everything should settle down in a few days when the fuss is over. But if a stock split still worries you, consider investing a majority of your investment portfolio in an index fund or ETF, which is a collection of hundreds of stocks rather than just one. Experts agree that this is a better way to diversify your portfolio and save for retirement. Putting your money in lots of different companies is better in the long run when compared to just investing in a select few. Investing this way typically is the clear winner when compared to stock pricing. Well, that's all for today's video. Hope you enjoyed watching this one. Thank you so much for watching our video. Please like this and share with your family and friends. and we will see you in the next video.